People always say you're a digital brokerage. Why do you have people? And I say this concept of digital brokerage doesn't make sense to me. Like, do you say digital bank? I mean, no, they're a bank. They have a website, they have an app, they have a call center.
Right.
Would you ever go to a bank that doesn't have all of those things?
Right.
Probably not, right?
Yeah.
So brokerages need to be the same. Let the customer engage with you in however they want to. I'm Danish Yusuf, founder and CEO of Zensurance, and this is the future of insurance.
This episode is brought to you by Hi Marley. Insurance is about protecting what you love, but for policyholders and the adjusters that support them, it can be a complex experience to navigate. The Hi Marley Insurance Cloud makes it simple for policyholders to connect with carriers how and where they want, via text, cutting through common communication lags that exist with phone and email. Drive value for your policyholders, decrease cycle times, and empower your adjusters and service teams to provide modern, lovable digital interactions that increase loyalty and retention. Visit himarley.com/customers to learn more and set up a pilot in as little as 1 day. You protect what we love. Make your experience lovable with Hi Marley. This April 26th and 27th in Chicago, join me and leaders from companies like Liberty Mutual, Nationwide, Allstate, American Family, Northwestern Mutual, and more for the AI and Innovative Tech event from Reuters. Hear from top leaders in the industry on how we can ensure all the new tech and tools we're investing in and deploying can have the impact we need to push our organizations and the industry forward. Register today by visiting future-of-insurance.com/AIUSA. Dennis, thanks for joining me for a conversation. It's good to sit down with you.
Thanks for having me.
I think you might be the lone Canadian this season. I know we've got some Brits, but yeah, I think you're the only Canadian. But it's good to hear a little bit about Zensurance and what you're working on. So thanks for joining me for the show.
Absolutely.
Can you give us a little bit of background about what Zensurance is, or what is it you're building? You're in the Canadian market. Tell us a little bit more about it.
Sure. So we're about 6 years old, focused in the property and casualty space, and more specifically in the small commercial space. And Canada is interesting, where we tell ourselves, if we want to know where the Canadian insurance market is in 5 years, look at the US market today and look at the UK market 10 years ago. So we're still on that journey of evolution to figure out what will our path be.
Yeah.
So if you think about,
yeah, no, go ahead. Yeah.
You think about home and auto insurance in the US, you've been able to buy it online for a long time and for decades in the UK. Our first such provider in Canada launched about 4 years ago.
Yeah.
And it's still a tiny, tiny fraction of the market. So it's largely intermediated distribution.
And where do you come in? Where's the change in this?
We started purely focused on distribution, and it's odd for me to say that it was innovative to sell insurance online. Right? We've been selling stuff online since the 90s, but it just didn't exist in Canada. So we started with a digitized distribution of small commercial insurance. We then started moving back in the value chain, where we're acting as an MGA in a sense that we don't wholesale our capacity, but we get the pen, we design our products, we set the pricing, but distributed only through our in-house brokerages, our in-house brokers.
So it's a direct play, but with you as the distributor.
It's essentially a direct play, but in the broker channel.
Yeah.
We can sell from any 30, 40 different providers in a given month. And so it's a really complex algorithm to figure out what's the right provider to go after, especially considering nobody has any APIs in Canada. So these are all in-house manufactured rates.
Yeah.
And we have to stay up to date with every market's appetite, rates, wordings, all of that has to be kept up to date.
That issue just came up in a conversation with a founder here in the States doing something on the broker tech side. And he was saying, historically, the carriers haven't wanted to share what their rates are, whether you're willing to do the heavy lifting or not. So how have you navigated that?
Brute force. So we got licensed as a brokerage in November 2016.
Okay.
And for the first 2 years, it was literally operating on paper and fax machines to build the trust of our carrier partners. So we were really, really old school. We had to buy a fax machine. We had all of the things you would imagine. We were paying by check. And every time we asked for a quote from a carrier, we would ask for a couple of different limits and deductible options. Mm-hmm. So each quote resulted in maybe 7 data points. And we would key those data points into our system. After 2 years, we now have 100,000 data points. We could predict what most markets in Canada would price a given piece of risk, focused on the risks that we would see.
Yeah.
So we would go to MGA XYZ and say, here's a submission. We would suggest a rate of $1,000 plus your customary $55 fee. And they would be shocked that we were proposing the price that in fact was what they would have quoted, but it's so much faster for us. We did that for 2.5 years until we built enough volume where we convinced a handful of markets to actually commit to prices and eventually give us the pen and issuing authority.
Was there any regulatory issue with that at all? That you were, as the broker, telling them this is what we think the price is, or you weren't officially doing that, so it was okay?
We weren't setting the price, and I'll come back to a regulatory point. We were not setting the price. We were, I would say, we were guessing the price.
Okay.
And it was up to the MGA or the provider to confirm it, and they'd have to confirm bound as well. So there was no issue there.
Yeah.
But one big difference between Canada and the US when it comes to commercial insurance is we don't have to file our rates or our forms.
Okay.
So I can change the price or form every day if I wanted to, as long as I'm not discriminating against customers. They're sort of treating customers fairly. That's still important.
Yeah.
But we don't have to file rates. That was a big benefit.
That's interesting, because that so much of the constraint in the US, the discussion is around that regulatory constraint. If only we had the freedom, and that's what ENS is for. But you're talking about a market where actually you have that freedom, yet it's not moved as far, it's not innovated or digitized as much as a market like the US or the UK, where there is more regulation there.
That's right. I think it's similar to the UK. They don't have to file
on the commercial
freedom
side
of rate and form for commercial. And Canada is essentially like the ENS market, except you don't need 3 declines to go there.
Right.
You can go straight there.
Yeah.
And the challenge, I think, from the carrier's perspective is if you start giving out the pen and codifying rates, many of them said this is going to result in a race to the bottom. It's going to commoditize the market.
Yeah.
Many of them say, we know it will happen. We just don't want to be the one that pushes it forward.
Yeah.
And my argument always is, if it's just price discovery that's stopping, is the barrier between commoditization and not, the product is already commoditized and you just don't know it.
Yeah.
So figure out a different way to compete.
Yeah. So what was the response? Did they buy it?
No, they did. Most did not buy it. Now, we don't need most to buy into it. We just need a handful. And we work very closely with a handful of partners where we have the full authority. And as a result, they get significant volumes from us. And that's how we reward them. Our loss ratio is very attractive as well. So it's not like we're writing everything. And I would argue that our underwriting is better than the traditional model. Because imagine if you're a typical producer, can you really know all of the questions you need to ask an electrician, a plumber, a janitor, a window washer? There's so many questions. You can't possibly remember everything every time.
Yeah.
But our system can, and not only for contractors, but for every type of risk. We would ask all of the right questions every time. We also track, did you change your answer? Did you go back and forth? Did you look at the price and go back and change?
Yeah.
And then we have a scoring methodology, which tells us, how confident are we in the answers that we got here? We scrape websites. So there's lots of intelligence built in that it's almost impossible to do in the traditional distribution model.
I was going to ask if you're using third-party data or alternative sources at all, because whether you have the right question set or not, one of the issues with the industry is how many questions we ask and whether the data is valid, that, the data that we're getting back is valid at all. So are you're using some other sources to bring in data so you don't have to ask, or to validate it, or both?
We do both. The challenge with the micro end of the segment, which is where we focus, there's really no reliable third-party data.
Yeah.
If you are, you're a carpenter or you're a consultant, there's no third-party source that'll tell us what kind of consultancy work do you do.
Yeah.
Other than potentially your website, but even that's not always accurate.
Yeah.
So third-party data is quite limited. It's more available if you're talking shops, because you have Yelp reviews and some licenses. So it's available there, and we do look at that.
Yeah.
But on the point of questions, we don't feel like you have to ask fewer and fewer questions. What we found is customers are willing to answer more questions, and we probably ask more questions than most online providers. But what really makes a difference is asking it in the right way with the tailored language. And that actually increases our online conversion. For example, if a photographer comes in, we don't say, how much contents do you want? It's how much is your gear worth? How many gigs do you have? And we insert some questions like that, even if we don't need the answer, but it gives the applicant more comfort that we understand their industry.
How do you build that customized, specific kind of N of one view for the customer so they feel like, oh, this is made for me, I can engage in this freely without feeling like it's a chore? How do you build that scalably when, I mean, you know, this small end, like people do 1,000,001 different things. How have you navigated that?
We're not done yet. It's still work in progress. But I think our question set is maybe 100,000 potential questions someone can be asked. And we've spent years optimizing the question engine. Like initially, I thought it's simple. You have Typeform, you have all kinds of question engines on the website, but it can get exceptionally complex in insurance because not only are you a carpenter, but you can, like you said, you can be three types of a contractor. If you operate in two provinces, maybe questions vary because one has more of an earthquake risk, another one has more of a flood risk. If you're above a certain revenue threshold, more things kick in. So our question engine is exceptionally complex. Probably the hardest thing that we've built is that. And it's constantly evolving.
What I'm curious about is like, so you're in a market that's not digitized, not not working. Well, like you said, you had to buy a fax machine, so it's like it's us accountants and maybe doctors' offices. Those are three industries keeping the fax industry going. And your first place to turn was in a space that is also pretty far behind. Why didn't you think about, or why did you focus on what you did and not say personal lines or some other spaces where maybe there was more likelihood of adoption?
Personal lines was something I did initially think about. And if I go back to, like, I was working in consulting before this, and I was serving insurance companies. And you sit in the board meeting or senior management meeting, and 80% of the discussion was on personal lines. 19% of the discussion was on large commercial, and 1% was small commercial. Most of the profit pool was in small commercial, or the potential profit pool, if you could solve the expense ratio. The loss ratio was great, the expense ratio was horrible. And in Canada at the time, there was zero solutions for small commercial. There were early solutions for personal lines. So I figured, let's go somewhere where I would have a much bigger head start than anywhere else. There's the highest potential profit pool, and see if we can figure it out. Ontario auto is famous for being unprofitable, but it's also half the country's auto market. So if we went after it, we'd be going after a fundamentally unprofitable business, and why go there?
Canadian market's really tricky. There's no question, especially personal lines. So I get small commercial. That's the space that I most recently came from. It's a gem if you can make the economics of it work, but the loss ratio, the performance of the business is fantastic. So all this work in the question engine, brute forcing the rates, where did that get you to? So how do you evolve from there? Because you got the platform now, you can customize for a growing set of different types of work that people do. You've got capacity from different markets. How does that play out?
So COVID, in many ways, has been really good for us because it accelerated online demand. We grew 4x in the last 18 months. That when COVID hit, we were just under 50 people. We're almost 200 now. Premium, customer count, everything is 3 to 4x. And so it's really just a focus of continuing to scale the business based on what we've built. But there's still so much more to be done. There's industries within small commercial that we haven't really perfected, like commercial auto. It's something we're looking at. Commercial property owners. So these would be not micro policies, the $500 or $1,000. These are $5,000, $10,000, $15,000 policies. And there's a lot we can do there. And property is simpler in some ways because there is third-party data available. And can we make it faster and better price it? Can we offer devices that can reduce the risk. So the water devices, temperature devices, something we're looking at. And we always get the question.
Is that on the property exposure? Or are you also thinking about the E&O side of it? Like, are you just going the mainline products? Or are you also rounding out professional liability and GL and things like that?
For our current small business customers, we cover pretty much every line: general liability, E&O, cyber, content. We do D&O, crime, bond. We do everything that a small customer would need.
Yeah.
And in the back, we can piece together coverages from different providers and package it together. We do boiler and equipment, boiler and machinery, sorry. We'll do legal expense. And for the customer, they get one product at the end, but it could be 5 different providers in the back.
Okay.
Yeah.
You really are. I mean, that's a really broad offering. You're covering everything.
I think in terms of products, it's very broad, because we felt that those small customers vary so much, but our sweet spot is that small customer. So we're not going after the big banks or large manufacturing facilities. We're going after the small customers and everything that they need.
It's one-stop shop.
That's the hope. I mean, it does add significant complexity, because we're talking many industries, 9 provinces that are quite different weather-wise and natural hazard-wise, 40 providers in the back, 6 types of coverages, multiple limits. I just did quick math, and that's 3 billion permutations we have to figure out.
Oh.
Yeah. And we have to have a price for all of that, those 3 billion permutations.
So now that you have those closer relationships, do you still have to brute force the rating, or are you given more clarity in that? Because if they're going to give you the pen, I would imagine they give you the rating rules with that.
I wish it were that easy. So every time we work on something, we get a defined area that we can work in, and we help the insurance companies come up with the rates. And then if we want to veer outside of that, we again have to brute force it. For example, mortgage brokers are considered a very high risk area.
Yeah, because they are.
Yes, and they are, and rightfully so. But there are elements of it, or types of mortgage brokers, that are seen as not as risky.
Yeah.
Maybe they have more, institutional capital. They have years of experience. They focus on certain types of products. So our job then is to brute force within mortgage brokers as far as we can, figure out the nice pockets, and then get capacity for the areas we think are reasonable to go after. So there's always going to be an area of brute force, but the area in which we can be super efficient keeps growing over time.
Yeah.
And it's nonstop.
Yeah, no, it is nonstop. I imagine even just, you mentioned the pandemic, what people do for work changes in economic shocks like that. We saw it in 2008 as well, that when vast loads of people lose their work, they still have to pay bills somehow. And so they get into, whether it's gig working or picking up something that was a side hustle now is full-time or whatever. And sometimes the classes of business haven't kept up with that. I mean, I remember in 2008, I was at a heavy E&O writer, and we had a lot of tech E&O, and we kept sticking a number of risks into the other category, or the miscellaneous category, because it was stuff that just didn't exist when we came up with our rating plan. And the way people are describing what they're doing, it's like, we don't have a bucket for that. So as your customer base is going to continue to evolve, and times like this are when you see that sort of gasoline on the fire moment. That's
right. And when you look at traditional companies, go off of either the SIC code or the NAICS code, or in Canada the IBC code, Insurance Bureau of Canada, that hasn't been changed in decades. So you'll never find dark kitchen in that classification, and there's so many of them now.
Yeah.
And there's so many examples of businesses that didn't exist even 5 years ago that can't be categorized there. So another part of our effort is coming up with a taxonomy of what people can do in the way they think of it, and then have a translation to put it in the format in which the insurance companies can then look at it.
Yeah.
And we're constantly changing that mapping. So I'd say probably the hardest thing of what we've done is just managing questions and taxonomies and pricing algorithms. That's the heart of what we do, and I don't think it'll ever end.
Yeah. Where does your model go from here? Is I get why MGA makes a lot of sense, and having the flexibility because of all those different products and appetites and everything. There's actually a lot of value in being an MGA over being a carrier. But is that where it inherently needs to go? I've had this debate with founders some are MGAs and they're like, no, we really don't have a reason to need to be a full stack carrier. And others, typically those who have become full stack, are like, no, every MGA is ultimately going to become a carrier. It's a step along the way. So obviously, like, it depends, but I'm curious what your take is on that.
For me, the value of being the full stack is ultimately controlling your product and price.
Yeah.
But it comes at the expense of significant capital and reduction in your multiples and your margin.
Yeah.
So I'd like to get to as close as possible to a full stack without taking the balance sheet risk. And so that might be a bigger and bigger MGA, but always having a reinsurance partner.
Yeah.
And so this question of how far back in the value chain do we go? I think there's probably one or two more slices we can take while not taking balance sheet risk. And then there's a question of how broad do we go? Do we stick to micro, small commercial? Do we get to mid-size? It'll be a different sales approach. You're not selling a $100,000 manufacturing policy online.
Yeah.
But there's a lot of technology and data that can help facilitate that transaction.
Yeah.
Do we get into personal lines? Do we launch into new geographies? All of these things we're constantly evaluating. For now, we've said we want to focus on Canada. We're 9 provinces, and let's see how broad we can get to own P&C broadly within Canada.
Yeah.
And then we'll decide after that.
What's the competitive landscape in Canada look like in your space? Because small commercial itself only recently in the US started to have real competition. I worked at the only direct writer of small commercial for a long time. And every year, all the analysts were like, this is the year they're going to have all this competition. And it really wasn't until maybe the last 5 or so years, that even less, that material competition arose.
Right.
And then Canada, being further behind still. Are you largely in N of one in this market, or are there other players coming into the space or in the space?
There are a few. I'd say we'd be the only ones at scale, and I say at scale loosely. We're still probably the 3rd decimal point market share. There's a lot more to go. There are a handful. They each take a different slice of the market or a different focus area. And I'd say the few that are there are now more focused on the US than in Canada, whereas we are entirely focused on Canada for now.
Yeah.
But I think commercial is almost 100% in the broker channel. There's no direct writer like a Hiscox in Canada.
Yep.
And within that, our main competition would be the mom and pop brokers that want to write the $1,000 policy. You've got the Aons and the Marshes, they don't want the $1,000 policy.
Yeah.
Even the mid-sized ones don't want it. So we compete with the neighborhood broker for the most part.
Yeah. I mean, it's back to that expense ratio. Is for most larger scale businesses, it just doesn't make any sense to engage in it, whether they're the carrier or the broker.
Right. And you can't, at least I don't think you can't provide advice at scale if it's entirely manual.
Yeah.
If it's automated with the option for people to talk to humans, I think that's the winning combination. And we have 100 licensed brokers, so we can talk to customers if we want to, and they can self-service if they want to.
So half of your team.
Yes, half the team is brokers. And people always say you're a digital brokerage. Why do you have people? And I say this concept of digital brokerage doesn't make sense to me. Like, do you say digital bank to, like, I bank with TD Bank? I mean, no, they're a bank. They have a website, they have an app, they have a call center.
Right.
Would you ever go to a bank that doesn't have all of those things?
Right.
Probably not. Right.
Yeah.
So brokerages need to be the same. Let the customer engage with you in however they want to.
Yeah, that's a fair point. I mean, it also creates a bit of a moat then for outside disruptors who look at the space and, kind of some of like the initial thoughts that you were having, but who think, look, we've done this in these other industries, pure tech, super lightweight. You don't need to talk to anyone. Actually, it doesn't end up working out that way. Even for the small minimum premium policies, they're still like, they still need to talk to someone some of the time. And so you can't do a pure play.
That's right. Some people, some of the time, want to talk to a human.
Yeah.
But if you can take what was, say, 3 hours of work, gathering data, rating, presenting, you shrink that down to a 20-minute conversation, that's a win for everybody.
Right. You can still be much more efficient, even if you're running a call center and talking to people risk by risk.
That's right. And I
Yeah.
always say the broker channel is the right channel to sell insurance because you have the availability of choice, which customers want, and advice. But individual broker count, I think, will go down just because you'll automate away the vast majority of the manual work that's done.
Yeah.
And the remaining people will have to be experts in their industry, not generalists, because you need to be able to talk and add value, not just be there to give a quote. So the bar for the people will go up as we get more automated.
Yeah. Do you see anything around, the catchphrase like this is a relationship business? And I know for the agents and brokers that I know, they really rest on those are my customers, my relationships. If you're doing things in a distributed model, in a digital model where you have a call center versus, an individual who owns the book of business at that brokerage, do you lose that relationship connection? And if so, does that matter? Or does it matter for this segment?
There are different segments of customers. There are those like my parents. They want to know that's my person for insurance, and I'm going to call that person whenever I meet.
Yeah.
And there's a segment, and there'll be supply for that, and those customers are willing to pay for it. There's a segment that if you force them to call you, you're never going to win them, right?
Yeah.
And so you just have to define what segment of customer you're going after, and understand what they value. They may not value a phone call all the time, but they probably value the ability to call when they want to. So you do have to supply that.
Yeah.
So figure out what your customers value and deliver that. And don't try and be all things to all people. That's impossible.
Yeah. Yeah. Dinesh, where does this go from here as an industry? Does the Canadian market, I mean, this is something I've talked to on the personal line side more, whether, customers are going to adopt the tools and they haven't to the extent that people thought they would. And do you see the Canadian market? Is it just 5 years behind the US or 10 behind the UK or whatever the measure is? Or is it actually its own thing and following its own trajectory? Or do you see a point of catching up or reaching some level of maturity?
I think it is an evolution. You're right that pundits have forecasted big changes every 5 years, and it hasn't come. But the thing that there's a saying that comes to mind is there's 2 ways to go bankrupt: gradually and then suddenly. And I think I just use the word bankrupt. I don't mean it in that sense over here, but it's going to happen slowly, 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 and then at some point there's a tipping point. Nobody knows when. But I think we will continue, and generally we will continue to lag behind the US. There's indicators in many parts of the economy where we are a little bit behind, even e-commerce adoption.
Mm-hmm.
We're far behind the US adoption of e-commerce.
Yeah.
So I think when you look at some of those indicators, we will probably follow the same trajectory, just on a delayed path.
Any sense of why? Well, I mean, to outsiders or people who haven't looked into the Canadian market, I think the presumption is it's just northern US from the way it behaves, but it really is a completely different market, not just insurance, as you're saying. Yeah. Any ideas why that is?
Even within Canada, it varies by province, right? Every province is quite different. Just like the 50 states, there's differences. I think people have made different guesses as to why that is. We do tend to be a little bit more conservative. So when I went out to raise money for Zensurance, Canadian investors were interested, but the check sizes they were willing to put forward are smaller.
Yeah.
In the US, it's just a bigger market, more risk-taking capability, more pools of capital. So people were much more willing to take risk.
Yeah.
But I think it's just that risk-taking appetite that probably is a contributor to this. I think I that's what would be my guess as well.
It's fascinating. I mean, it's not my view is like, yes, it's northern US, but the people are nicer. So if anything, it shall be easier.
But even you look at our big investor now is an American insurance company, not a Canadian insurance company.
Yeah.
And so they saw the future of commercial insurance, and they said, hey, we're willing to back this, even if they're in Canada.
Does that create a pressure for you to, I mean, you talked about your Canadian focus. Does their investment create any pressures to come across the border, or are there other ways that like they could take some of what you're learning and apply it here?
No pressure at all. There's learnings that we share. We've got separation of what we can share with them so that we can operate as an independent broker.
Yeah.
We don't want that conflict to be there. But so it's Travelers Insurance is our big investor. They're also in Canada. I think the big thing they want is just the learnings of how something like this happens and how do we build a digital business. But no pressure to do anything specific. We're still run independently. I still set the path for the company.
Yeah.
They do have another play in the US called Simply Business, as well as in the UK. So they've got 3 geographies covered with their investments.
Yeah. Oh, it's interesting. I geek out a little bit on like trying to figure out what could unlock faster evolution for Canada. And I've tended to be wrong on everything. So it's just something to watch. But it is really interesting to me how an overly simple view of things leads you to just presume. And it's actually quite different. The dynamics are different, the way it plays out in the player. And that's why you don't see a lot of overlapping carriers. Certainly personal lines, a lot of the US carriers, I think except for Allstate, no one's left. Everyone else is a local player.
State Farm, I think, was the last big one to leave.
Well, so State Farm used to be Liberty Mutual in Canada, where I worked at Liberty at the time, and we sold it to State Farm. And then Aviva bought out the State Farm business. And I always said Aviva's like the State Farm of Canada, or of the UK rather, but now it really is the State Farm of Canada. But yeah, I mean, that's 2 major US carriers who couldn't make the Canadian business work or not well enough to make the hurdle, I guess.
It's a very different market. And you'd think that maybe commercial would have evolved faster given its much lighter regulation. Yeah. But it hasn't. I mean, we don't have the equivalent of a Next or a Cover Wallet or Bunker. All of these companies, there's us and there's a couple of small ones, and there's still so much more that we need to do.
One, I think that's maybe the lesson in that is for people who hold the regulation as this is why we can't. Well, maybe it isn't, because here's a market where they don't have those regulatory constraints, and it's not super digitized, and that's why you have fewer competitors than if you were on this side of the border.
Yeah, I think there's also a mindset thing. When I speak to underwriters, this being a non-insurance person, I always get frustrated when someone says it's an art, not a science, underwriting. And I say, well, okay, there might be a little bit of art to it, but all you're doing is putting stuff in a spreadsheet and doing some debits and credits. And yes, there's some context around it, but if you do it at scale, and even if you're wrong part of the time, you can price for that chance that you might be wrong. And it's a perfect environment for applying data, because it's data in, algorithms applied, price out, and then iterate. Why can't you do 80% of the time automated, 20% have a human review it? But I haven't been able to convince people of that.
Yeah. That's something as an industry we need to get better at. I don't know what art they think that is. Maybe there's conditional formatting, making the spreadsheet change colors and stuff, but no, I totally agree with you.
And I'm only talking about the small stuff. I'm not talking about big complex risk, just our space of small insurance.
But that's the point. It can be. And it operates a lot like personal lines. It's, quite often there are no employees or very few. And I always say like the personality or the persona of the business, it directly follows the owner. So if the owner is really risky and risk-taking, then the business probably will be too. And if the owner is really buttoned down and follows the rules, then the business will probably abide by lots of rules too, just like personal lines.
That's right. And like personal lines, people tend to buy the lowest priced product, whether we want them to or not. That's what they go towards. There isn't a whole lot of brand loyalty. The best known insurance brand in Canada does not even operate in Canada, and that's Geico. Everybody knows Geico. Geico does not operate here. It's just the Super Bowl ads and all of the leakage on advertising that comes here. So they're price sensitive. They're not too brand loyal. They do want choice because they're used to choice and everything. And so it all points to the broker channel being the right approach, but you just have to really make it a simple experience, like an Amazon or a Netflix. It has to be as simple as that.
Yeah. That's interesting. I didn't know that about Geico, but if anyone from Geico is listening, then maybe the Canadian market should be your next growth bit. You don't have to advertise; it's already done for you.
You've already built the brand. Just come and operate here.
Yeah. So on the Geico North. Dinesh, thank you for this. It's really interesting. And to watch. I guess we'll start the clock and see 5 years from now if it's like 2021 in the US, but up in Canada, which means you'd have a lot more competition, but you have quite a head start.
Competition is great. It keeps all of us on our toes. This whole great resignation that we see for people, all that means is employers have to treat their people better.
Yeah.
And if there's competition in this space, we all have to up our game and treat the customer better. So I welcome the competition. I think it's better for everyone.
No, it's great. Awesome. Thank you for sitting down with me.
Thank you for having me.
Thank you to Danish for sitting down with me for this interview. It was great to hear a little bit about the Canadian market and what he and the team at Zensurance is building up there. It's cool for me because my background, most recently being the small commercial space at Hiscox that he mentioned, it's neat seeing how that same thing is playing out in the Canadian market, and it's quite different. And it really, I don't know if it's just behind the US or if it's materially different and it's on a different path, which means maybe different solutions, different ways of addressing the market. So it is interesting to hear what they're doing. I mean, all of the products he's talking about, that's quite unique from what you would see developing in the US, where it's a lot more specific to, say, the E&O and GL, which seem to be like the main focus lines for the small commercial startups or direct writers or digital solutions. Maybe throw in the BOP, maybe commercial auto, probably not. But he's talking about, I mean, he even mentioned surety bond, like really rich offering. D&O. Nobody's writing D&O digitally direct online in the US, or not yet, at least. I think maybe there's one or two who are pressing into that space. But it's really interesting and it's different. And there's a lot more to go for them. So I'm excited to see how the Canadian market as a whole continues to develop, to see what Zensurance is building. They certainly have quite a head start on most of the other players in the industry, certainly all those who aren't there yet. That's quite a lead that they're taking. So congratulations to Danish and the team. And I said to him after we're done recording, after 6 years now in the industry and having started an insurance solution, when do you stop saying I'm not an insurance guy? And I hear that over and over again from people at startups say, well, I'm not an insurance person. How long do you have to be in the industry, or what do you have to build before you become an insurance person? And maybe, like you said, with his bankruptcy example, it happens slowly or it happens all at once. Maybe that's how it works. And there's some pivot point where he suddenly will be an insurance person. But we're lucky to have him and have what they're building up in Canada at Zensurance. So thank you again to Danish. Thank you to Hi Marley for supporting this show, and to all of you for tuning in. Remember, the easiest thing you can do is tell someone about the show. It's so important. The more people we get thinking about how to do things differently, how to engage differently with our industry, for our customers, for our partners, really for helping stand by people at those toughest moments of their lives matters. So you can tell someone about this show. They can listen for free. They can watch for free. It doesn't take anything from anyone except a little bit of time, and it can help move our industry forward. So please do share the show. Tell people that you know, that you care about, that work in this space about it. Just send them to future-of-insurance.com. They can add /podcast if they want and get right to the show, or just click on the word podcast at the top of the screen. And of course, if you like what you're seeing and you don't want to miss an episode yourself, subscribe, whether that's on YouTube or Apple Podcasts or Spotify or whatever. Subscribe to the show, throw a like, good review. It all helps spread the word, and all of that matters for moving the industry forward. So thank you to all of you for tuning in again. Thank you to Danish again, and I will see you back here next time. Thanks, everyone.